morning and welcome to Jackrabbit Trader, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the markets and some stocks to watch for Saturday, September 9th, 2017. First things we want to point out, I hope you guys are using these stocks to watch. Obviously some of them, as we go through the Jackrabbit Club and stuff, I can't necessarily take every trade, and nor can you. But the one thing I did want to point out is we talked about ABBV last week on this breakout above 74.50. Closed the week 75, gave you a chance to get in right around 75.50 this week, and you would have made $10 this week on a per share. So big move in ABBV. So, you know, like I said, I hope you guys are using these videos just to kind of round out your watch list, or maybe even taking some of the trades. But you know, this is the basics with this system, with this weekly trading system. Is, you know, you never know what's going to happen. You know, you never know what's going to take place in the following week. You know, that was one of them. COL was one that we were in, that I was personally in. I actually got out of earlier in the week on the news that they merged or were bought out by United Technologies. So again, just because you see the same pattern over and over, you never know what's going to happen, right? That's the same pattern as ABBV, and sure enough, you had a nice move. So let me know in the comments if you guys are finding these videos helpful, if you're able to profit from them, because that's the whole intent. You know, even though, as I said, you can't take every single trade, it's nice when you do take some of them and they work out in your favor. So with that said, let's take a look at the SPY. And as we talked about last week, we came and hit resistance last week. We thought we were going to go through, break to new highs as some of the other markets did, but the SPY instead pulled back. Really an inside week from last week, which is just another form of consolidation. Still in the range between 248 and 241. Until either side of that trade breaks, you're just going to get more of the same choppy, lifeless type of market. Not much to really do. And you know, this is kind of what we discuss in the Jackrabbit Club a little bit more. Is, you know, there's times that you need to do stuff, and there's the majority of the time when you don't do anything. And when you don't do anything is really when you start making those profits. And in the SPY right now, you know, there's nothing going on. No breakouts, no breakdowns. You know, really just sideways. So keep that in mind. QQQ, again, last week talked about the new highs that we made in the Qs, and sure enough, again this week inside. So what an inside week is when the high and the low of this bar, the current week's bar, is inside the body of the previous week. Okay, it's the exact opposite of a bullish or a bearish engulfing pattern. Inside weeks are just forms of consolidation. So big moves were made. This is just another way to kind of settle out. And remember, this was a holiday week, so we had Monday off, so not much trading happened. Let's see how next week plays out, and we'll go from there. But for right now, you know, sideways at best in the Qs. Diamonds, similar situation. All right, basically inside last week's bar with this big range between 220 and 216. When I say big range, it's a sarcastic comment. And, you know, we're right on that trend line. So let's see, again, what happens next week. IWM had a big move off the lows last week, or last 2 weeks. And then this week gave a little bit back. So, you know, sitting now above 139, using that maybe as some support. Maybe we consolidate a little bit and then break out higher again. Maybe we just roll right back over. Hard to tell right now, and, you know, can't really tell. That's the whole point. You're just managing the price action and managing the stocks in themselves. So, you know, again, not really much going on. XLE had a nice little pop this week. That was the winning sector of the week, and you can see that we broke back above this downtrend line. We did that about 5 or 6 weeks ago, and we did it again this week. But again, not closing anywhere near that high of that candle, which is concerning. This maybe just be another you know, move higher to break back lower. We'll see what happens. XLV, healthcare, we're going to have, you'll see in a few minutes, our stocks to watch. A majority of them are healthcare names. And we talked last week, you know, if you want to buy the XLV, you just buy the XLV. And sure enough, it followed through at another nice week higher. So again, if you were able to get in on a trade, it's a great trade. Just looks like it's just starting out, but some people may flip it for a quick profit. That's up to you. But you know, the setup was there. Take the trade and see what happens. XLU continues to kind of grind higher above this breakout level. So we'll see how we continue there. XLP maybe looks like it wants to roll back over and test this trend line. Again, time will tell on that one. XLB really just still in that range, all right? Range between 55 and 53.50. Again, nothing necessarily at the point where we need to go ahead and you know, move in either direction. It just looks like it wants to go sideways. And the loser of the week, the XLF and the XLK, those two were the two that underperformed. I'm sorry, and the XLY, those three underperformed the market. And you know, we'll see. But again, it's just about this whole process with the sectors. I mean, obviously you can take the trades in them if you wanted to, but the whole process with taking, with looking at the sectors and looking at the ETFs for the different indices is really more just to kind of gauge your expectations going forward. With what we've talked about, you would probably not expect to find many trades based on everything consolidating, everything moving sideways, maybe a little bit lower, maybe a little bit higher, and the ones that are higher, like the XLV, that's where you would want to see some concentration in your watch list for this week. But if you saw something in the XLF that is now looks like maybe is breaking down or even pulling back from this support or resistance area, you know, maybe now that's not the best time to be buying them. So it's just a matter of figuring out where you want to be and gauging your expectations by going through this top-down approach and seeing what is working and what's not. So with that, let's take a look at some healthcare names. All right, so the first one, ABT. Okay, let's take a look. Maybe we'll clear this chart out. We'll just start from scratch here. Let's go actually down to a 3-year chart just to make it a little bit easier. 3-year week. All right. So a couple things here to look at first. First, you have your uptrend, right? You find one point, you're going to find the second point, all right? And your uptrend's in place. You could also look at this as another uptrend. Maybe a little bit more accelerated, but an uptrend. Second thing you want to find is your support and your resistance. Okay, so support, let's go ahead and look at the lowest close for the last couple weeks, which will be somewhere around the 48.50, and then the highest close, which would be maybe around 51. Okay, and there is your setup. Okay, so where we're going to put our stop is where we're invalidated on the trade, which would be, for me, a close below 48.50. It hasn't closed below that level in the last, say, 10 weeks. And now here we are breaking out. We're breaking out above a previous resistance area right around that 51 area. And you can see that going back to the middle of July. And then sure enough, July of 2016. I'm sorry, this is 15. July of 2015. And then again in July of 2017. And then again last week, we came up to 51 and we hit it and we stopped. This week, there was no stop. We broke right through it. New breakout. Stop would be set under 48.42. You'd be risking about, what is that, $3.50 per share. So you take whatever your position size is or your risk that you're willing to lose. So if you say it's, to make the numbers easy, say it's $350, and you're going to risk $3.50 per share, well, then you're going to buy 100 shares of stock, and that is your appropriate position size. All right, so it's very simple to calculate that once you know the parameters that go into the equation. BSX. We've talked about this BSX back in April, and really hasn't done much since, but here we are now making another new high, another trend line in place. All right, find the highest high and the lowest low of the past few weeks and set your stop, which is, call it 2650. So again, breaking out some new highs along this uptrend. Great looking trade there in BSX. Could have got in it in April. If you're in it already, and when you calculate your position size now, if that is in fact greater than the position size when you originally took it, then you add the difference to your position. So for argument's sake, say you had 100 shares here, and now you calculate and you could have 150 shares, whether it's because your account value has gone up or because your stop level is closer to the entry level, then the difference between 150 and 100 is 50. So you would add 50 more shares. You're not adding any more risk to the trade. You're still sizing the position just the same as you would back here, whether you're risking 500 or 350, whatever it was. You're still going to risk the same percentage of your portfolio, whether it was 1 or 2 or 0.5%. And sure enough, now you're able to add to that position size, have a little bit of a bigger position, and that's how we add to winners. And you can see how we do that in the Jackrabbit Club. If you're interested, just head on over to the link down below. You could sign up for the free email newsletter that we send out every weekend with where we actually manage my portfolio in real time. And I think having that information and that a little bit of screen time is very helpful when it comes down to what you need to do, when you need to do it, and how you need to do it, right? I can go through my portfolio in a matter of 10-15 minutes a week and know exactly where I'm adding stops, where I'm trailing stops to, when I'm adding to a position, if I'm exiting the trade, if I'm entering a trade. It's all done within 15-20 minutes, and it's just more about practice. You gotta have the screen time to do it. eBay. All right, so eBay, again, I've talked about this where we have this trend line in place, and new consolidation, and then pretty much you could keep the same stop or even trail it up just a little bit to 34.61, but again, a new position, a new breakout along an uptrend line. So it is just that simple. MMC, okay, we've talked about this in the past. Again, a breakout along an uptrend line. All right, and then find the highs, find the lows, gives us our consolidation. Our stop goes at the lows around 76.85. So here you go. You're trading around 82, stop around 76.85. Calculate the difference between the two. Divide your overall portfolio risk that you're willing to take by that number, the difference in the per share, and that'll tell you how many shares. And that's a financial. So again, like we said before, do you want to add to the XLF right now? Do you want to add to financials right now? Well, that's your choice. Does it fit in your portfolio? Does it not? Because again, you never know what's going to happen with some of these trades and how they're going to work out. So, and last but not least, ZTS. Again, another breakout. Here we had a breakout way back in May, and now it's really consolidated since, breaking out again. So again, you never know where these are going to go, so I always like to err on the side of putting the risk on, especially if the markets are not breaking down. If the market doesn't look like it's gonna fall apart next week, then I usually will add to the add some positions on, and we'll see how we're going to do that in the Jackrabbit Club video. So again, if you want to get on that list, head to the link below, jackrabbittrader.com, sign up for the email newsletter, and see how we do it. Other than that, have a great rest of the weekend, I should say, and we'll see you next week. Take care.